Alright guys, this is part 2 of the previous video, and in this video I'll try not to make this so long like the first one. And in this video I'll be covering other things I was unable to cover in the last video, which includes certain stop losses and certain take profits on when using the heads and shoulders pattern in this video. Alright guys, so this is Prime Flex and I'm back with another massive strategy. Well, I'm not back with another massive strategy. I'm just doing the completion of the previous strategy I did. Okay, so I just want your full attention in this video, and trust me, you're going to be profitable after watching this video. So if you focus on this particular window that I am on right now, you are going to notice something. I found an head and shoulders, but where exactly did I find my head and shoulders? I told you guys that we're going to be using the relative strength index for looking for our chart patterns. And in this case, which is our first entry, we are focusing on head and shoulders pattern. So where do you think the head and shoulders pattern happened in this window? Well, if you can spot it, then I think if you can't spot it, then I think you should go back to the first video and watch extensively on how I spot the pattern. Alright, I was able to give a very clear description on how to spot the heads and shoulders pattern in the last video. Alright guys, now if you look closely, you are going to see this place. This is actually an heads and shoulders pattern, and you might be asking how. Well, let me show you guys why I think it's an heads and shoulders pattern. If I should zoom in and I just make this clearer a little bit, you're going to notice I have a peak, an higher peak, and a peak that is similar to the first peak. And the first peak is the left shoulder. I told you guys in the last video. The highest peak is always the what? The head. Then the other peak is the what? The right shoulder. And I have my neck, which is a connective line, a connective upward line that connects the left shoulder and the right shoulder in an upward direction. So where is my entry? My entry is always the breakaway of the what? Of the line. This is a very virtual example of what the heads and shoulders pattern. All right, it is not going to look like the one you're going to see in your chart pattern book, or the one I'm going to draw in my the one I drew to explain in my previous video. So you just have to as a trader, you need to understand that you need to have a very sharp eye to spot these patterns if you're going to be trading them. All right, so this is a typical example of an heads and shoulders pattern. All right, this is a what? This is a typical example of an heads and shoulders pattern. Now, I said I'll be teaching you guys the using using stop loss and take profit. Now, what is going to be my stop loss and what is going to be my take profit? Now, for the stop loss and the take profit, we are still going to be using the pattern, all right, to determine our stop loss and our take profit. All right guys, so for the stop loss, if I am going to be entering at the red point right here, that means it should be around here. Let me just clear this. Let me clear this. All right, if I'm going to be entering at this red circle right here, that is going to be around this place. Now, when I enter the market, where do I put my stop loss? My stop loss should be at the top of the previous spike, the top of the former spike. So if I'm going to be entering here, my stop loss is going to be around this point, and I hope you can see clearly. Then where is going to be my take profit? Now, the take profit is in two different ways. All right, you can set your take profit in whatever way you want, or you can just use the length of how long the head, or how far the head is from the neck. All right, so let me just show you that. So I've cleared everything, and I'm just going to use a trend line to draw this. All right, now my take profit is going to be the gap, or how far the head is from the what? From the line. All right, so If I'm going to use it this way, I'm just going to see if I can copy this. All right, so let's do this. All right, so this is how far it is, right? So the head to the neck, I have it right here. So I think it's going to cover 6 candles the way I can see it. Or I think let's just do it this way. So this is the length, and I'm just going to do it this way. All right, so I'm going to be taking my take profits whenever the RSI touches, or whenever the RSI is equal to the length of the arrow I just measured. So okay, let me do it once again for those that would be unable to understand. So whenever I spot my entry, or let's say I have entered the market right now, so my entry will be at this point right here at 11921.9353, which is showing me a clear, which is where the market showed me a clear breakout of the neck. All right, so where is going to be my take profit? Immediately I enter the market, I'm just going to take out my arrow, and I'm going to measure the length of my head from the line. Okay, when I get that, I'm just going to move it from my entry. I'm going to move it, and I'm going to place it anywhere. I'm just going to place it there. And now what I'm waiting for is I'm waiting for the RSI line to equal the length of my arrow. Once the RSI line equals the length of my arrow, I'm going to take my profit, which is going to be at this point right here. So this is a very descriptive way of using the stop loss and the take profit. Now, or you can use it, or you can use the risk to reward ratio formula. So if you enter the market and your stop loss, which is above the previous spike, it is about 3 points, you can go for a take profit of about 6 to 7 points, which is going to give you a 1 to 2 or a 1 to 2.5 risk to reward ratio. Or you can go for 3 to 9, so your 3 points stop loss and a 9 point take profit, which is around 1 to 3 risk to reward ratio. So which means for every uh one uh one trade you win, you have been able to edge out 3 other trades you are going to lose. So basically that is just the point of risk to reward ratio. All right, so let me just look for another way to show you guys this. All right, this is not going to be an head and shoulders, because in this point we don't have an highest peak. All right, so this is not what we're looking for. We're looking for a trade where there's a clear definition of an head. All right, so is this an head and shoulders? No, this is not an head and shoulders, because if you look clearly, the neck is in a downward motion. We have the shoulder, the head, and the shoulder, but the head is in a what is in a downward motion, so it is not a clear definition of an heads and shoulders. So let's just keep looking for our preferred heads and shoulders pattern. All right, so is this an heads and shoulders pattern connecting the neck? Yes, it is, because we have the neck connected in an upward direction, and we have the shoulder, the left shoulder, the head, which is the highest peak, and the right shoulder. So this is going to be a very good trade for us. Now, after taking the trade at a clear breakout of the neck, which is going to be at this point at 11872.0347, our take profit is going to be the length of our head from the neck. So I just measured my length right now. So have I measured the length correctly? Yes. So now after measuring the length, I'm just going to move the arrow to where I took my trade. Then I'm just going to leave it there. And whenever my RSI equals the length of my what?
whenever my RSI equals the length of my arrow, I'm going to what? I'm going to take my profit. Or I can just do it the risk to reward ratio way. So if I'm going to be entering at 11872.03 from 0347, my SL is going to be at the previous spike, which is up here at 11876. So my entry was 11872 and my stop loss is 11876. That is a 4 point stop loss. And if I'm going to be using a 1 to 2 risk to reward ratio, I'll be targeting an 8 point take profit. Or if I'm going for a 1 to 3 1 ratio 3 risk to reward ratio, that will be 4 to 12 point take profit. So I think you understand what I'm trying to say right now about this. So using a stop loss and take profit is just basically based on individual choices when trading the market. So it is completely all based on how you want to take your profits, how greedy you are, or how scared you are, or whatever you think is going to happen. So this is another example of an heads and shoulders pattern. Now, don't just think I just look up at the chart and I spot it immediately. I already have a diagrammatic representation of how it should look like in my head, so I can interpret it very clearly even in a choppy market, because I already know the rules. The first rule is I need a top, I need a peak, and I need two other peaks that are lower than the highest peak in the middle, and I need a neck that is what's going in an upward direction. So when I see these two confirmations, I just know it is a clear head and shoulders pattern. So don't think I'm using magic. I'm not using magic. All right, so in this case I have the left shoulder, I have the head, and I have the right shoulder, and I have the neck connected in an upward motion. Now where is going to be my entry? A clear breakout, which is at this point, and that will be at 11887. All right, so where is going to be my take profit? I'm going to just whip up my arrow, measure from the neck, from the head to the neck, and then I'm just going to take the arrow, I'm just going to slap it from my entry, and my whenever my RSI is at the same level with the tip of my arrow, I'm just going to what? I'm just going to leave the trade. So at this point, whenever the RSI touches the 39.30 level, I just know I'm leaving the market immediately. That is for the graphical representation of take profit, or I can just use the usual risk to reward ratio. So my entry is here at 11887. So my stop loss is going to be at the previous spike at 11891. So that is going to be a 4 point stop loss. So if I'm going for a 1 to 2 risk to reward ratio, I'm going for an 8 point take profit, or a 1 to 3, I'm going for 12 point profit. So basically this is just how it works. All right, it is very simple and very easy to understand. All right, so that is just it based on stop loss, based on take profits using the heads and shoulders pattern. It is not something too complicated for you not to understand. If so far you are able to understand the rules, you should be able to spot out very tiny the tiny diagrammatic representation of this pattern. And an example of that is this one right here. It is very tiny, and if you're waiting for a textbook representation of the pattern on your chart, you are going to miss this completely, because this just looks like some zigzag in the market, but it is actually an head and shoulders pattern. All right, so you have the left shoulder, you have the head, and then you have the right shoulder, and then you have the neck connecting them in an upward motion. That is it. Then you have the breakout point, which is at this area right here, and you just wait for the market to go down. This is very easy to understand, very easy to understand. Just understand that chart patterns are just the market repeating itself, all right, in a certain form, and it happens in our daily emotions. The market is based on emotions, and human emotions are always repetitive. So when a market forms a certain pattern, it is likely to form that same pattern in another time, because human emotions are repetitive. So and they are how am I going to put it, they are predictive. All right, human emotions are predictive. So you can use the repetition of emotions to predict what is going to happen next. So in an heads and shoulders pattern, we know when the pattern happens, we can predict that the market is going to go down. All right, if it's going to repeat itself again, there is going to be a certain win rate for us when we predict that the market is still going to go down in the same manner. So this is just a very very simple explanation about that. So thank you for watching this video. If you want to get a clear understanding, you can watch the first video. So PrimeFlex says bye bye.